So at TKG, I also work on board and management advisory, where we help teams improve their governance structure. We help them with enterprise-wide risk management programs. And in some cases, we help troubled banks emerge from regulatory problems with their regulators. Recently, I worked with a community bank that was looking to formalize their risk management process. So what I did was I interviewed their board and interviewed their senior managers to help them determine the level of risk appetite in various forms of risk throughout the organization, including interest rate risk, liquidity risk, credit risk, and others. And based on the responses, we put together a risk appetite statement that combined the bank's thinking on various risks. And to support that risk appetite statement, we build a key risk indicator dashboard full of metrics, objective metrics that they could use to measure the level of risk within the various areas. And they use that key risk indicator dashboard on a monthly basis to give a visual picture to their board, their management team, and their regulators of the level of risk they're facing throughout the organization. When I work with clients, I generally try to draw on my 30 plus years as a community banker in a fairly rural central Pennsylvania set of institutions. My background is primarily in credit, lending, and credit risk management. However, I have spent time as a chief operating officer, so I understand the operations of the organization, and have been a CEO of a community bank, which has allowed me to understand the challenges faced at the top level of community bank organizations. There is no one best way to do things. There's the best way that works for your organization. And by truly understanding the resources that your bank and your organizations bring, we can help your team craft solutions to operational problems that they might find difficult to solve by themselves.